And now we get to one that, like I say, Placer AI was talking about, Pete, and that's Lowe's. They were saying, hey, Lowe's should do very well in their earnings report. This is based on their foot traffic. One of the things that they're famous for, Pete, is tracking foot traffic. You know, that's everything from cell phone signals and so forth to other measurements of how people are moving around and what they're doing. And if they're going into Lowe's a lot, well, that's probably a pretty good sign because people don't just kick the tires when they go into Lowe's, they're buying stuff. Comparable same store sales decline came in better than expected. And that's why the stock popped to the upside. But then the inverse of what we just talked about with Palo Alto happened. Even though it came out better, now they're hitting it. After a brief rally, Pete, they came in and started selling.
Well, and I think the problem is the DIY, the spending demand there really kind of pulled back significantly, John. Some of the sales declines that we had seen as well, the guidance was solid, but it wasn't anything exciting. So that kind of held people back. By the way, same store sales decreased for the sixth straight quarter. They lower the numbers, John, so you can step over it sometimes, whether it's earnings or revenue or whatever it might be. So it looks like they really are beating, but are they? Are they beating, or have they lowered that bar significantly? And I think that's part of the problem. That's why Lowe's, I think early on, some of the numbers that they gave, people were excited about it. Then they suddenly looked a little bit deeper and started to change their mind a little bit. That's why the stock was at 231. Now it's trading right around 222. So I think it's interesting. I like it, but they've got to get those folks in the store and spending the money. And they're seeing some of the foot traffic. They're in the store, but they're not buying as much as they once were. And I think that's part of the problem.
Yeah. Some of the other folks, Pete, that track things like receipts that get emailed out to people and so forth, were saying that, yeah, they're shopping and they are spending, but they're not spending as much.
Right.
So you're spot on there. They're, and in many cases, they're trading down from like a brand name like Black & Decker or something like that down to the house brands and things like that. But that's the way things go when people are not feeling quite as confident.